The broadcast is now starting. All attendees are in listen-only mode.
So, good evening, friends, and welcome to this webinar on Groww Nifty EV and New Age Automotive Fund of Fund, NFO that is ongoing, and this NFO will be closing on 7th of August 2024. So, to take us through this Fund of Fund offering by Groww, we have Manish, Ranjan, Head of Sales and Distribution from Groww Asset Management Company. And so to give a background about Manish, Manish has over 2 decades of experience in financial industry and majorly in mutual fund industry. And he's holding a master's in management from Sydenham Institute of Management from Mumbai. He started his career with Nippon Asset Management Company, and within the organization, he moved to various verticals. And he has good, as I said, that he has over 2 decades of experience. So we have the right person to take us through this fund of an offering. So over to you, Manish. A warm welcome to you. You can take us through the FOF offering of yours.
Thank you, Saji. Thanks for the introduction. And thank you for giving us this opportunity to share our thoughts. And thank you all the participants for joining the call. So today we are going to talk something which is very interesting that many of us could have heard in last couple of years, which is called EV. Electric vehicle is a buzzword that all of us have been hearing for quite some time, but none of us had opportunity to be part of this growth story because this indices came 1.5 months back, and we at Groww, we felt that this can be a great opportunity from a long-term point of view to offer it to our investors. So today we're going to talk about the opportunity that we see in this space, why we think EV as a story will do well in next 5 to 10 years, and why there is a great merit in the product itself, because we are seeing a big shift happening in this sector. So just to give you the background, EV, today when we go and talk to anyone, at least we can see that buzzword. You see on the road, people are now using this vehicle. We see a lot of vehicle in our basement, in our parking. So there is a shift happening. Now why this shift will continue to grow and why we think there is a large opportunity, something that we'll discuss with all of you. Now look at this. This is a very interesting slide. In 1890 there was one motor car amidst several horse-driven car. In 1913 there was one horse-drawn car amidst several motor cars. Do we expect similar situation in next 20 years, wherein you'll probably see many electric vehicle and less of ICE vehicle? We might see that kind of shift happening in the global economy, not only in India. Now, what happened in last 4-5 years? While this focus from the government has been there for last 4-5 years, if you look at the number, the growth in the EV adoption has been very fast. If you look at the two-wheeler vehicle, in the last 4 years, it has grown from less than 23,000 vehicle being sold in 21. Now last year we have sold more than 1 million vehicle in two-wheeler alone. If you look at three-wheeler, it's now currently at 42,000 vehicles being sold. In four-wheeler, 1.26 lakhs, and bus. So these four set of vehicles are the key driver for this opportunity, this growth, and we expect a massive shift in the adoption of vehicle in all the four space. Typically, you look at the growth opportunity that government looks at. We are looking at a 12x growth over next 4 to 5 years, 6 years, 8x in three-wheelers, 7x in four-wheelers, and 8.5x in bus. So if you look at the adoption, we are all set to see a big shift in this space. And not many of us know, today India is the third largest auto market in the world. So the opportunity for us to grow from a overall growth point of view itself is pretty large, and the adoption of the electric vehicle will further kind of help the sector to grow at a faster pace. Now, what will cause this growth? A lot of us have our own set of doubts. हमें लगता है कि growth क्यों आएगी? Because today when all of us meet a lot of our own friends, we see some bit of doubt at times that was हम कार तो ले लेंगे but हमारे पास इंफ्रास्ट्रक्चर नहीं है, हमारे पास क्यों लेना चाहिए, क्योंकि अगर हम कार लेंगे ट्रैवल करेंगे, we don't have enough infrastructure today, and hence there could be some bit of doubt. Now you look at the four major factors that could drive this growth from here on. The first, owners of EV ownership, which means all of us are now looking at this primarily because of multiple factors. First being the cost of ownership. When you're buying a car today, the biggest concern that we have, that if we are buying a, let's say, normal car, and if you're buying EV, the cost of buying EV is very high, and then we do a lot of maths and we see whether there is a sense for us to buy EV from an economy point of view. There we are seeing economy of scale will start playing in, and the cost of ownership will come down, and I'll share a lot of data as we progress why this will come down. Now, second part, manufacturers. We are seeing a lot of large players in India. They are now getting big time into manufacturing of EV vehicles. Second, distribution and dealership. That plays a very, very important role. And fourth part of this is batteries. So unlike the typical ICE car, in the EV, battery is the biggest component. And in fact, battery is 40 to 50% of the overall cost of any vehicle, EV vehicle. So these four things are likely to be the biggest driver for the growth in the segment. Now, first part that I was talking about, the ownership. Today, you look at the ownership. When I'm talking about ownership of a car, it has to be looked at from a 4 to 5 years ownership perspective. So you buy a car, you pay premium compared to normal car, and then you look at anyone driving, let's say 30-40 kilometers per day, what could be the ideal break-even point? And gradually we have seen the shift. Now most of the total cost of ownership for most of EV vehicles have started kind of becoming better than the normal car. So the first drive or ownership will happen because we as a consumer will start seeing the cost of ownership kind of coming down and becoming better than the normal car. Second, EV financing has become very competitive. All of us know that we also get tax benefit when we buy EV vehicles. So that's again something very, very important when you're making that final decision of buying a car. Third is vehicle options. Probably 3 years back, you didn't have many options. Today, you look at any of the large, vehicle manufacturing company, auto manufacturing company in the country, they all are really trying to grow this piece big time. So whether it's Maruti, whether it's Mahindra, whether it's Tata, you name, they all are really trying to expand the product line on the all this space, two-wheeler, three-wheeler, four-wheelers. OEM again play a very, very important role. So today, if you look at electric vehicles, it's basically very simple to manufacture. Unlike the old ICE vehicle, ICE internal combustion engine, typically all the old vehicle that we have is ICE vehicle. While the EV vehicle, it's very easy to produce, because when you're building something, you don't have to have a large line of infrastructure, large set of platform that you need. It's a very, very easy to manufacture. We also assume that EV market will at least see 10 to 15 times more new brands, new models coming in, and that will give a lot of options to the end consumer in terms of having much more choice to go and buy a vehicle that you like. So the product in terms of acceptance will grow, because as a consumer you will have much more options to go and look at. The EV kit simplifying the manufacturing OEM. Again, from an OEM point of view, the kit has become much simpler, which is more in terms of having the better manufacturing facility, because you can create the product in a much simpler way. The first point that I was talking about. And in this whole value chain, there are multiple factors who will play important role. R&D, manufacturing, financiers. Now, next part, any sector that we have seen in this country, the growth will be primarily driven by 2 or 3 things. One, the adoption by the end consumer. Second, the support that government gives to that sector. And third, whether today we have enough infrastructure to go and use that kind of product. Now, there is a very interesting story that I want to share with all of you. If you look at mobile adoption, All of us who are probably old enough in 98, 99, or probably early 2000, I remember when I was buying a phone, it was really expensive, and the incoming call used to be some 18, 19 rupees. Outgoing used to be 18, 90 rupees. I remember that time it was sense of as if I've got something which is very niche, very luxury, and it will not be something available to all of us. And then the economy of scale, why it didn't that time, it was very expensive. One, because we had a very less number of model, less number of companies in the space. The infrastructure in terms of 2G, 3G, 4G that times were not there. And third part, the cost of making calls and ownership cost was very high. So all the three factors were too expensive for us to imagine that will be in an era in probably 20 years wherein all of us now can't live without phone. So that adoption happened once we saw economy of scale playing in. We saw a lot of large players coming in. We saw cost of phone coming down. We saw cost of calls coming down, and then much more infrastructure got built in because of the focus that government has. Today, we are in the same stage. The adoption of two-wheelers is 2% today. Sorry, it's 5% today, and we expect it to move to 30% in next 4 or 5 years. So same is true for four-wheelers and buses. So there is a big shift which will happen, and the all the three factors will drive that shift. Government is playing very important role, like the example of cell phone. Here, if you look at the demand is there, people are willing to look at this vehicle because they see economy of scale. They see that it can give us better cost of ownership, but the government is doing a lot, and there is a very strong reason for us to believe in why government is trying to do. Indian auto sector today is the, as I mentioned, is the third largest auto market in the world. Today it gives the employment opportunity to 37 million people. It's today probably 45-50% of total organized employment in the country. So government has three key priorities that they can achieve by offering the right kind of incentive to this EV story. One, obviously, the government is very concerned in terms of our dependency on fuel. So that will bring, if we adopt more of EV, the fuel import that we do will bring our all cost of import down. Second, the the fact that when government is trying to grow this whole piece with the help of better infrastructure, better adoption, the carbon neutrality, again, that's a big ask for a lot of us. So the more we adopt EV, it will have lesser, it will be more environment friendly and better for the carbon neutrality. And third, it becomes a very large opportunity for government to create more job opportunity over next 4 to 5 years or 10 years. So there are enough incentive for the government that we believe this sector will continue to get the prominence from the government on either bringing better regulation, bringing better schemes. PLI again is something, production link incentive, that gives direct benefit to all the companies who are in the business of building either auto EV vehicle or in the component of EV. So government initiative becomes very important, while customer adoption is the first important thing. The support regulation from the government will kind of play a very catalyst for this whole sector to grow from here on. Distribution, again, the fact that this EV distribution is much simpler, and in the income, so typically from a distribution point of view, it's much more profitable than the normal ICE variants that typically distributors have been selling. So even from that ecosystem, that distribution channel will prefer selling a EV vehicle compared to normal old ICE vehicle. So even they are aligned in terms of having a right focus on growing this segment. The last important part, which all of us know, battery has been the biggest concern. So all of us, when we even consider looking at EV, we think about whether our car will have enough battery charging, whether we can travel to a certain destination and we can come back if you're traveling out of, let's say, our main location. So these are the important consideration which all of us have, and at times that becomes the key hindrance while deciding to buy EV vehicle. Now, we are seeing a shift in this space as well. Today, a lot of companies are now, we see a lot of companies are now trying to get into creating infrastructure for battery charging, though it's still in nascent stage, but I think over next few years you'll see big shift over there. Second, again, if you look at the story of cell phone, we think there will be a lot of technology adoption, a lot of change in technology from lithium to ACC, and so many new change of technology that will increase the lifetime of battery. If you look at phone, when we started, phone used to have some very small daytime in 4-5 hours. Then we started having a better battery. Then we started having much better, faster technology to charge the battery, and so on and so forth. So that whole cycle happened over a period of 8, 9, 10 years. In this space, I think similar story will play out, whether the quality, because of technology of coming in big time, the quality of battery will improve, and hence we'll be in a better position to have not only better infrastructure of battery charging facility, but we'll have better battery itself that will give you much more comfort when we buy vehicle. Battery swapping is something which is again happening big time. We are seeing it's again wherein a lot of people, when they're concerned while driving, if you think my battery is gonna die, I'll be in a trouble. So there are a lot of companies who are trying to get into battery swapping. So you go to station, you give your old battery, in a fraction of minutes they'll swap your battery with the charged one, and then you start driving. So all these things I think are playing big role in terms of changing the landscape for the growth of this sector. Rising number of market participants in battery value chain. We are seeing a lot of players, as I mentioned, who are coming in this space and helping the whole ecosystem to become stronger. And a lot of large players have started getting into battery charging, so on and so forth. So I have given you enough reason now why this sector will grow. Look at the synopsis of the 5-6 points, which I did mention in the beginning. The support from government in terms of FAME, PLI, cost efficiency, lower cost of ownership compared to typical old engine, technological advancement. The EV vehicle today is in a much better position to go and adopt high-end technology, because we have seen the Tesla of the world, a lot of companies who are there, even in India, they offer much superior technology compared to the old system. Environment concern, which I did mention, market potential, size of the market, and economic benefit, because when we're trying to buy some product, we ultimately we think there has to be economic sense while doing something. So all these parameters look to be completely aligned in terms of having a better adoption, higher adoption, and that's something which gives us a lot of confidence that this sector from here on will continue to grow at a much faster pace over next at least a decade. So now when we look at EV, a lot of us need to look at EV from a larger point of view, and that's why we call this fund EV and New Age Automotive Index. It's not only EV. EV is the current story. EV and Automotive Index becomes and New Age Automotive Index becomes a much larger story, because EV is today becoming the best probably alternate for the old vehicle. Could be few years down the line, it could be some other type of vehicle. It could be hydrogen. It could be something else. So everything will be part of this index. It's not only confined to EV. Tomorrow, if hydrogen vehicle becomes the new, let's say, fashion, or adoption is higher, even they'll be part of this index. So it's a very, very large theme. And within EV, if you look at normally why we call it as thematic fund, we don't call it sector fund, because in a thematic fund you have a very, very large theme to play on. In a sector, it's typically confined to one sector. So a theme like EV will typically comprise of multiple themes, multiple sectors, and I'll come to that as we progress. So this index is very and it has come 1.5 2 months back. NSE has developed this index, and now there are not many funds today, but the methodology could be very, very important, because as we start seeing the progress in this industry, as we start seeing more players coming in the industry, you'll see a lot of new companies being added to the index. All of us know one IPO got closed today from this pure EV play, and I'm sure a couple of months down the line they'll be part of index. So they have a rebalancing every 3 months because this industry is growing at a fast pace, and hence rebalancing will happen every 3 months. That gives you opportunity to be part of all the new age company related to EV and automotive who will be coming over next many years. Index rebalancing, I did mention it will happen every 3 months. Index constitution. So today, when I mentioned initially, this is not one sector. While it's a value chain, if you look at the EV theme, you have one automobile company and the component manufacturing company. Second, you have got IT will play important role in this value chain. The chemical company will play again very important role in terms of battery, then capital goods company, oil and gas, consumer services. So it's a theme which is much wider theme, and it comprises of multiple subsectors who all will play very important role when we are trying to see the growth happening in the industry. All the sectors in the value chain will really be the biggest beneficiary of the shift which will happen over next 5 to 10 years. Indexed again from a cap point of view, it's a 55% mid cap, 37% large cap, and 7% small cap. So it's tilted towards mid cap company, and it has to be, because today when looking at this space which are likely to grow at a fast pace, you will have more of mid cap, and they are the potential company. If they get it right, they'll become a large company over a period of 5, 7, 10 years. The current top stocks in the index: Tata Motors, Maruti, Mahindra, Bajaj, RIL, KPIT, CG Power, L&T, Sona, BLW, Bosch. They are top 10 holding as per the index. Now, this slide is very interesting. While many of us will have this thing in our mind that whether this product is better than Nifty index, while I'm going to show you purely from a last 5 years, 3 years, and 1 year return, this index has delivered far superior return. If you look at the return, typically it's been much better in terms of the return in all the time frame. However, this return is purely past return. There's no guarantee that the kind of return we have seen in last 3, 5 years or 1 year will be replicated over a period of time. It depends on a lot of factors, and hence you need to consider all the associated risk with the product, and for that you need to consult your advisor, HDFC Securities. They'll be in a better position to guide you. The NFO will be closing on 7th of this month, which Sajid did mention, 7th of August. We have another 4-5 days. So from a overall theme point of view, I'll just kind of summarize the whole story that I just shared in last 15 minutes. We are in a space which will grow at a faster pace. India is the third largest auto manufacturing market in the world. We have a very high adoption of EV over next 5 to 10 years, and we are early in the cycle today. But I think with all the points I have shared, over next 5 to 10 years, the adoption will increase from, in the next 5 years, from 5% to 30%, and in that process we'll see a lot of story, a lot of multiples will be created for a lot of large companies, a lot of companies which are part of this index, and that's something we're trying to capture. And this is very at nascent stage, and hence there are few risks also which are very important for us to consider. A product like any thematic fund should not be your core portfolio. It has to be satellite portfolio. We call it satellite, which means it should be not more than 5 to 10%, 15% of your portfolio. While it's a good theme, we all believe that this theme will play out over next 5 to 10 years. There could be some inherent risk, and I want to highlight that risk because that's important. While we are talking about a lot of good things, what could be inherent risk today? You remember when this cell mobile phone business started, a lot of companies who came in the early cycle, they were market leader. But if you're market leader, if you don't adapt, you might not exist after a few years. So that risk of getting extinct because you didn't change or you didn't adapt is very high in any sector which is very high on technology. Let's say there are few companies, all of us keep on talking about it. Nokia, BlackBerry, they were the leader in the cell phone market, probably 18 years back, 15 years back. And today they are no more leader because shift happened in the segment. Industry has grown, but some of them who did not keep themselves, aligned with the change, they didn't exist, or they become very, very small in the overall business. So that risk will be there. Good part, when we are looking at a theme and it's getting rebalanced every 3 months, that's the biggest advantage of being in a thematic idea. That if, let's say, one of the companies today who are very large in this space, if they don't do well over next 3-5 years, by default they'll move out of index. They'll not be part of index. And some company who are new, let's say for example, the company who is a pure EV play is getting listed, they'll be part of index in few months. So you have a auto rebalancing that will ensure that any company who is not doing well today will move out in some time, and company who are doing great in this space will keep on getting added. So there's a risk, but then in an index that risk becomes much lower. However, the story is slightly long. We need to play with a clarity that this will play out many times. This story becomes very, very large, but you have to give time. That's very, very important. And I wanted to highlight that risk part. This is FOF, and all of us, while we know FOF, fund of fund means we have something called EV and New Age Automotive ETF. So which means ETF is basically nothing but it's kind of stock which is available on DMAT. If we as a mutual fund investor want to buy FOF EU, we invest same amount that we receive in that particular ETF. So these are two different vehicles that we have. ETF is one vehicle that is traded on the stock platform, and mutual fund platform we do through FOF. So we take money that you invest with us and we invest in same ETF. So that's why we call it FOF. The taxation for FOF is similar to any other equity or ETF, so that will not change. So that's from my end. I'll be happy to take any questions that you might have around the product, around the theme, around anything. Thank you.
Shaman, thank you so much, Manish, to take us through this fund of fund offering. We are open for Q&A. We have a question mark sign right at the bottom. You can just click on that and post your questions. So Manish, while we get the questions, so just wanted to understand, how has the growth of EV vehicle been in, some of the developed countries when you look at US, or say probably China as well. So I think India is, still the penetration is not that high, but how do you see that?
That's very, very interesting question, Saju. I think so. Today in India, adoption is around 5%, while for a developed country like US, it's 20%. In China, it's 30%, and in a Scandinavian nation, it's as high as 80-90%. So adoption in the developed market has been extremely high. We are slightly slow at this point in time, but if you look at the trend, it's really encouraging. Saji.
Yeah. So we have a question. What is the expense ratio?
So any fund of fund will have less than 1% expense. In this FOF, our expense, while today we can't give you exact answer because the size will determine the expense, but ideally it will be in the range of 50 to 60 basis points.
Sure. I'm just going through the questions, Manish, please bear with me. Yeah, so the other question is, what is the difference between FOF and ETFs? I think you have already explained it, but if you can just repeat it once again.
I'll do it again. So as an investor, you have two options to invest, in this theme. One is ETF. ETF is nothing but it's a pool of stocks which are available to be traded on the exchange platform. So if you go to any of, let's say you go to HDFC Security platform and you want to buy ETF, like share, you go and look for Nifty, Grow Nifty EV, you'll find the like stock, you'll find this, and you can buy it real-time basis. So the biggest difference between ETF and FOF, in ETF, you can go in platform on exchange and you can buy it real-time price, while on FOF, it becomes the price like any other mutual fund. And that's the main difference. And obviously, second difference being that you can invest in EV ETF on platform or exchange, while in the FOF, you can invest through any of the distributor through mutual fund route.
Sure. The next question that we have is, does this FOF have any exposure to mining companies that mine minerals used in batteries?
Not really. We have, if as of now, if you look at chemical is important component, but we don't have anything in mining. This is the composition. Oil and gas is there, chemicals are there. Mining is not part of this thing.
Okay. All right, Manish, I think we have answered pretty much all the questions that were there.
So Saju, anything you want to ask in terms of any other thing that you have in mind?
I think the presentation that you have taken us through, well explains the opportunity that lies in this sector. Obviously, it is a thematic fund, and it rightly comes with a certain kind of risk, and the exposure has to be, as you have rightly pointed out, it has to be based on the risk appetite of an individual. So investors can definitely get in touch with their HDFC Securities RM and discuss and then initiate the investment in this fund. Manish, I just have one question. See, in India, if you see, it is only the traditional, car manufacturing companies that have moved to, that are listed. Do you also see, just like Ola Electric, has come up with an IPO which started today? Do you see any car manufacturers also coming up, in the future?
It's a good question. Today, if you look at
cost-intensive, industry, so that's why.
yes, you're right. So today you look at the number of large players who are putting big time money in this an EV theme, be it Mahindra, be it Tata, they are putting a lot of money, and obviously this is today a very high capital intensive investment. And today for a small player to come here in the large value chain is at this point in time looks very difficult. However, there could be some, let's say Hyundai is planning big time. Tomorrow there could be some large player from the globe who can be part of this chain, because they all see large opportunity in this market. So you could see that part. Second, which I see very, very important, is the lot of infrastructure related companies who are not exactly making the auto, but they are the supplier of, let's say, battery or battery infrastructure. They are also very, very large. So batteries, the fact that batteries 40-45% of the whole uh, this EV game, there is a lot of
Right.
things happening in that space. You might see tomorrow someone large player, building a large infrastructure and becoming very large in, let's say, just simply infrastructure of EV vehicle through charging facility. There could be some company who could be building large, let's say they'll bring revolution in the battery, quality of batteries, charging capacity, so on and so forth. So we might see that shift. And that's something which is difficult to predict who will be that player, but we are very confident, and you'll see a lot of such players will emerge over the next 5 to 10 years.
Sure. The next question that I have is, now obviously, in this budget the government also backed the idea of moving, from onto the EV. So taking the 5% penetration to 30%. So just wanted to know that, since now we have the government backing, the entire EV industry, you can say. Do you feel that the company will still grow the similar way, even if, probably there isn't that kind of push from the government, say, in the future?
See, anything, if the end consumer should be the most important decision maker, especially for a product like this. While we need to build ecosystem, government is doing a lot in terms of incentivizing people to buy, benefit in taxation, building a lot of things. But I think the cost of ownership will play important role, and the adoption will happen only if we as a consumer really feel that this is a better proposition for me. That's exactly what happened in cell phone, and now this is something which will happen here, because there is a genuine inherent need for people to look for a better viable option which can give you economy of scale, which can give you cost efficient mobility. And in that part, I think this will play a very, very important role, that we as a consumer, we think this proposition is good for me. So in that space, I think we are probably progressing very, very fast, because the cost of ownership is actually coming down. Tomorrow, if the scale will start playing in, and you will see the battery prices, which is today very high, will come down, like it happened in a lot of other sectors, and that will bring the cost down. So all these things, eventually the scale itself will lead to lower cost of ownership, and that will drive the growth in this segment. That's what I see, at this point in time.
So we have a question from the participant. But does this FF also has any exposure outside India?
Not really. We are playing this purely in India. We think, our country, the fact that we are one of the largest auto manufacturing country in the world, we at this point in time, this index is investing only into Indian companies.
So I think we'll take the last question again. You have already answered this, but for the benefit of everyone, if you can just repeat this: what are the funds you'll be investing initially in this fund of fund? So,
can you repeat it? What are the funds?
You will be investing in this FF. Basically, you'll be investing in the your ETFs, right?
So you're trying to ask where will we be investing this?
Yes, absolutely. That's the question. Yeah.
Right. We'll be investing in the ETF of EV. That EV ETF is something that we have parallelly launched, which is getting closed today. Now, once tomorrow you go and check on HDFC, not tomorrow, probably a few days, you'll find this EV ETF on HDFC Securities platform. So it's kind of stock. So let's say if today you look at any mutual fund, what we do, we build portfolio, we buy, let's say 30, 40, 50 stocks, and we go and buy that stock as a mutual fund from brokers, and that's part of our portfolio. In this case, we are not buying the 30, 40 individual stocks. We are going and buying that ETF, which has 33 stocks, underlying stocks. So we are buying that one ETF, which is the 33 stocks, which becomes the part of the portfolio. So that's the only difference between normal funds and this fund. Both the funds underlying will have stocks. Here in normal fund we'll have many stocks. Here we'll have one ETF, which in turn will have 33 stocks, which are part of index.
Right.
Hope this answers the question.
Absolutely. So I just have one last question, and then probably we can wind this up. So just wanted to understand, because the companies that we have seen are, most of the companies are already listed. They are in the traditional manufacturing, moved on to the EV play as well. So do you also see that even if the EV does not pick up, you see good growth in the traditional car space, this FOF will still give a better return, because obviously the underlying stocks remains the same, at least for say next 1-2 years, until we don't have a new player coming in. Just like we have Ola, which is listed, and say until next few years we don't have a new entrant coming into this.
So I'm happy, Saju, that you have asked this question. I think this was there in my mind. I forgot it. So today, the name itself, it's not only EV index, EV and New Age Automotive. So today you look at EV, as I mentioned, it's at nascent stage. You don't have many of pure EV play companies in the country, and hence all the companies who are today pure traditional players, they are trying to make inroads and they are putting a lot of money to grow this business, which is EV vehicle, be it Mahindra, be it Tata. So they are anyway, they are very strong in the traditional way of selling automotive. So, so tomorrow, if let's say, for example, we strongly believe this, there will be shift will happen in EV. Let's assume shift will not happen in EV to the extent that we think, let's assume that part for a second. And let's say shift will happen in hydrogen vehicle, or it will probably remain in traditional way of the way things are happening, or it could be hybrid vehicle, it could be plug-in vehicle. So there are n number of options which might emerge if let's say something happens and this doesn't play out. The fact that today pure play EV is very limited. We are part of a theme which is capturing the whole gamut of theme, starting from traditional EV company, and it will also include any theme which might come, any companies which might get listed in the not only EV space but new age automotive space. So tomorrow, let's say hydrogen company who can build hydrogen car will come. They also become part of this theme. So it's a much larger theme, and it covers starting from traditional companies to EV to future of mobility, which could be hydrogen, which could be many other vehicles. So hence, it's a pretty large and good theme from that point of view.
Sure. Thank you, Manish. I think it's been nice that you have taken out the time and take us through the new fund offering that Groww Asset Management has come up with, and you have well advised on the you can say the risk associated in investing in the thematic fund as well. I'm sure our clients will get in touch with the HDFC Securities RM and discuss and then make the investments in the fund of fund. So it was nice having you here. Your last thought before we end this call.
So thank you, Saju. Thanks for giving us this opportunity to come and talk to all your clients about this great opportunity. We strongly believe that this is a good play over next 5 to 10 years. While this will come with slightly higher risk than traditional funds that we look at, but people who understand this theme, people who have conviction in this theme, or people who have any doubt, they can always reach out to your team. You have pretty large and well team that they can guide them in terms of their risk appetite. But you must consider investing if you have understood the risk part, and or you have spoken to the team from HDFC Securities, and if they advise you to invest. That's very important for all of us, because while we at times we tend to get influenced by what's happening around, we must take the prudent financial decision. That's very important. So that's from my end. Thank you, Saju, and thank you everyone for joining the call. That concludes call from our end. Thank you so much.
Thank you everyone for joining in. Yeah.